venture capital, startup, entrepreneurship. These things can seem very complicated at first. In this video, we are going to be diving into the subject, and we are going to be interviewing one of the leading experts in this field in the Middle East, in Dubai, Mrs. Cinderella Amar. So, want to get right started, guys. Stay tuned.
For the company to grow, you need to do some partnership, right? And they know so the investor not only put money into the company, but this is what we like to call hands-on. Will also help you to build, right, within your company. So basically what I do is not only investing in them, I put the money to have them grow, but I advise them. So
that was the point. You're giving money to someone, you don't want that money to go to waste. You want to actually try to keep
I want to make sure, exactly, I want to make sure I take them to Wonderland.
You don't want the heartbeat to go into
exactly.
We were very lucky to be able to have these extraordinary women on our YouTube, on this channel, because representation matters. So here, guys, we have the legendary Cinderella Amar, and today we are going to be learning with her what a VC does and what's the whole point of a VC, a venture capitalist. So, want to get right started by asking a few questions. So, Cinderella, you had a very interesting investment banking career from being in Paris, then you went to Geneva, then Hong Kong, and then here in Dubai. What made you switch from banking from Paris all the way to, well, Dubai?
Oh wow, that's a question I was not expecting, but thank you for that.
And like, what is so specific about this place?
Sure. So I have to say, I'm thankful of my time in traditional finance, what we like to call TradFi, right? Mm-hmm. So I've been 15 years working, as you said, as an investment banker. I was in capital markets. You can feel the passion. There were no passion, for me at least. You know, some people can like it. Me, it was not my thing. But at the end of the day, thanks to that experience, I managed to go and switch to the crypto space, right? So eventually what happened is that I would try to make it easy, right? But basically, I ended up from Paris to go to Hong Kong, still in the same industry, right? In traditional finance. And I was, at some point, I had a team of salespeople, and they were selling this product, these financial products, to some very big institutions, right? And these products made no sense. Meaning that you would sell something that is actually, you're losing money when you invest in it, right? And this was because of the landscape at the time. The offering on the market was making you lose money when you're investing. So it was like, I don't really understand what's going on here. Like, I can't, like, if I have a little, work ethic, I can't sell to someone something knowing that he's going to lose money. And in the same time, I was a bit of a geek and I was attracted by the cryptocurrency space, right? And eventually I would see all what I like to call the juice, all the returns you would get by investing in these instruments. And I was like, in traditional finance, it's dead. There is no yield anymore. There is no juice. There is no, you invest, you lose money. And I look at the cryptocurrency space, and of course there is some risk attached to it. But I was like, this makes more sense. So I did something that we say quite ballsy at the time, which is leaving the traditional finance space that everybody was regarding as like, the Graal, it's great to have such a job. And I was like, that's it. I'm leaving the corporate space. I'm going to startup. People were like, it's suicidal. You can't do that. You have a big job. You can, as we say, milk that as long as you can, which means like, keep that job, get like good pay. It's stable. It's good. You have kids, to sustain. You have a family to support. You live in expensive cities. Don't go to the startup. A startup in the next month, they cannot pay you. It's just like, it's very risky. And on top of it, you go to cryptocurrency space. This was silly back then, right? But I did it, and I found a real passion. So the passion I was lacking for 15 years, I just found it overnight when I made the shift from traditional finance to the cryptocurrency space, from a corporate industry or type of work to go to the startup work without a safety net, nothing. And I found passion in the new technology, passion in the fact that I was literally looking at it that if I am in that space, I can future-proof myself. I can protect myself against the future, which is by definition the opposite of where I was. So I always like to say I was in the old world and I'm now in the new world or the future world, right?
Right. So you just came upon about that? You just like found it like that overnight?
Yeah, well, it's not as easy. At the time I was looking to shift from the old world to the new world, you wouldn't find such a thing like headhunters, or I would say HR looking to fetch you, right? You come from a different space, you're a bit of an outsider, so you need to learn by yourself a bit what you do with your podcast, right? You need to go online, do some research, try to meet people from the industry, get to meet them. So I reckon that in 9 months, I met more than 200 CEOs and senior executives from the largest crypto or digital asset shop. And I just like networked, and every single person I was meeting, I was learning from, because it's a real community of giver, which is something I really like in this industry. And people will give you a lot of hints and clue on how to learn more about the new technology, because this is something I love so much in this industry, is that you keep on learning all the time. And then after these 9 months, I met so many like legit and relevant people and big people from that industry. And eventually I'm blessed. I got just a lineup of different offers to join the industry. It was just a perfect time for me to be there. Yeah.
Right. And how would you describe what a VC does in one sentence?
Sure. So after switching from traditional finance, I joined a digital asset manager, right? So it was I would say there is a thread here, because what I was doing in traditional finance, I applied it to the world of cryptocurrency. And then I decided to do something even more ballsy. I decided to set up my own business, right? And I realized that when I was working with the digital asset manager, I was getting an amount of what we call deal flow. So I would have a lot of information about new startups coming to the market and with new technology, right? And I would see directly these startups, how well they would do. I would see a startup that anyone would be like, oh my God, I want to be a client of that startup. I could use their product every day. It's going to change my life. So I would see this startup, I would see the mass adoption that would get. And the more traction as a startup you get, the more you can show you can drive a community, attract a community, you can see the cash flow, you can see the dollars, right? So when I was sitting on this amount of deal flow, I was like, okay, I should do something about it. And I got extremely lucky. I mean, things happen for a reason, right? We say it's mektub, right? So I met this serial investor entrepreneur, and he looked at me and he said, look, I am a deal maker, you're a deal. And I was like, what is this? Like nobody invested in me, never, right? I just had to work hard to get where I got, right? And then he was like, no, you're sitting on such an amount of deal flow and you don't monetize it. You don't make money out of this deal flow. We should do something about it. And this is where the idea of setting up our own investment fund to invest in early stage startups using all this new technology would be our thing. So this is how we started our journey.
Like, can you describe to us what is a VC? Like, what does it do?
So when you run your investment fund, basically, you get and thanks to your prior background, right? Thanks to the network you built, you have some access, right? And you get what we call deal flow. Deal flow is basically different startups coming to you that are looking for money, right? And these startups look for money to be able to go to the next step, to be able to show that that their proof of concept is working, they can attract a community, there is product fits what they want to offer to the markets as a real existence, right? So these startups need venture capitalists because they need their money to be able to go to the next step, right? To be able to go from a startup stage to a company that is already in a growth stage that would potentially become a big company. We call it unicorn very often. So the unicorn, as it says, it's a mythological animal, right? But a unicorn is a startup company that at some point managed to get a valuation of above $1 billion, which is what you're looking at when you want to invest in startups. You want to invest in a startup that will become something big. You would have loved to be an early investor in ChatGPT. You would have loved to be an early investor in Waze, right? In all these companies. So this is what we're looking to do. We're looking to invest very early stage. Exactly. It's a bit of a gambling, but if you do it in the right way, so depending on the network you've built for yourself, which give you access, right, to premium companies, premium startups, then you have the right amount of due diligence. The due diligence is how you look at the investment, how you look at the startup per se, to make sure it's going to be sustainable, they're going to be successful, right? So they need to have the right funders, the right people. At the end of the day, you invest in people, right? So you make sure that these people can deliver, right? Because it's good to have an idea, but an idea stay an idea if you don't have the right power to execute it. So you need to find people with the right idea and with the right power of execution, right? And then that everything they put on paper, even though it's going to change, because everything changes all the time. We are in an industry where you run against time like the industry. You run against the fact that you need to shift your brain. You need to pivot your brain, because if something happens overnight that will jeopardize the idea you had, you need to be able to shift overnight and be like, okay, that was my idea. I'm not going to be stubborn. I'm happy to shift, to make a bit of aesthetic surgery if needed, to do some relevant shifts to make it work. These are the people we want to invest in, right? People that are able to be like, because very often when you're a founder, your company, you look at it as if it's your kid, it's your baby. And at the end of the day, you need to be able to be like, okay, my baby needs to revamp his nose. We need to take him to the clinic and change his nose. You need to be able to, to be like, okay, I'm going to do that, because this is what is important for the success of the company.
Right, okay. Which stage do you invest in pre-seed, Series A, Series B, etc.?
Sure. So the way we decided to do the investments, we decided to mitigate the risk. How do you mitigate the risk? Is by investing in different stages. So there is 2 areas that we're happy to invest. One of them we do early stage, and one of them we do what we call growth stage. Growth stage is when the company moved already from the startup position to something a bit more established, and showed already that proof of concept is working, the minimum viable product is working, they manage to attract a community, they need a bit of more money to be able to acquire something, another service, or to grow internationally or so on. And this is where we're going to invest. So the early stage, we invest in early stage in what we like to call the Web 4 space. So maybe I will give you a little bit of understanding of the Web 4, because it's extremely exciting. So very briefly, it all started with Web 0. Web 0 was a French ancestor of the World Wide Web. It was called a Minitel, right? It was just a screen, basically. And then you had access for a computer. Web 1 was read only. You don't need to go to the library anymore. You can go to Wikipedia. You can read blogs, right? The Web 2 was the social web, read and write. I can go to Wikipedia. I can edit an article. I can send emails. I can do WhatsApp. I can do Zoom. I can go on YouTube, right? So, and I can answer, I can edit my YouTube video. I can do all of that. The Web 2 is the longest in terms of the lifespan of the Web X numbers. And we're still in the Web 2 right now. And then you heard of the Web 3. The Web 3...
The metaverse.
Exactly. So the Web 3 is read, write, and own with the NFT, right? This digital pixelized art, right? Or it can be a representation of a lot of digital or physical things, right? So I wouldn't say the problem, but I would say the challenge of the Web3 with the metaverse feature is the total addressable market. Who is into the metaverse really? It's going to be, Generation YZ, right? It's going to be like we could like to call DGen, right? So it's not necessarily for your grandpa, right? It's not going to be necessarily for your dad even, right? So basically, I think the metaverse for now has failed in terms of like, it didn't reach the maturation of its ambition, right? But we needed the Web 3 to get to the Web 4. The Web 4 is the next iteration of the web. The Web 4 is a one-stop shop with a smart internet. It's read, write, own, because you have the NFT, but also manage your data, link your data, and use your data to make your brain a superpower brain, right? So what happened with the Web 4, it's going to be peer-to-peer network like internet, but decentralized. So this is a blockchain feature. They're going to be AI. They're going to be augmented virtual reality, right? And all of this, and quantum computing, and all these new technologies. So if I look at the Web 4 space, what I really like about it, any single project or startup I see in the Web 4 space that I can label and say this is Web 4, because they have an AI component on the blockchain and this and that. Any single project I see, it's very simple. I want in, which means per my individual retail capacity, I want to invest in that project because I think that, like, if I want in by my retail individual capacity, the whole world will want in. So I see the dollars because I see the mass adoption. So the excitement and the magic about the Web4 is that, as I said earlier, any startup, any project that I want in, I want to invest because I know the whole world will want in. It's like when you think about it, ChatGPT, you don't know it exists. The day you meet him and you're like, he's your best friend, right? It reminds me Steve Jobs, right? The father of Apple and iPhones. Like 20 years ago in Palo Alto on stage, he would look at people, right, in the audience. And it would be, you see, everybody is equipped with a smartphone, right? Well, from now on, we will be able to do a video call. And people were like, there is no product fit here, you know, like a video call. Like, I don't want to see your face at 2 a.m. in the morning when I am in my bed, right? I don't want to put makeup and whatever, right? It's just like, and why would I want to see you when I call you? Like, it doesn't make any sense. Guess what? Today, it feels like we don't make normal calls anymore. It feels like we need to call people in video. It's going to be Zoom, it's going to be in WhatsApp video calls, and so on, right? Or Instagram, or Botim, and it's just like, well, he created the product fit. So the Web4 startup are creating a product fit. You don't know it exists. The day you made it, you're like, I can't live without it. That's a positive description about it. Whereas in Web3, where I still invest, because I invested in Web3, but in growth stage, when the companies showed already they can deliver, then this is where I'm happy to look into. In Web3, you need to assess it very differently. You're going to meet a company and you're going to be, okay, what is the TAM? The TAM is the total addressable market, like who this product is going to be for. Is it going to be for kids? Is it going to be for institutions? Is it going to be for retail? Is it going to be for old people? You know, like these kind of things, right? So what is the TAM? Total addressable market. What is the product fit for this TAM, right? And what is the go-to-market strategy? What is my strategy, like, to address them, to target them, right? So these are the different things you're gonna look when you want to assess a project in the Web3 space. But the beauty with the Web4, you don't need all that because they create the traction, they create the product fit. Just by existing, people come to them.
Right, so it's really like a new technology, a new thing. And so you basically invest in pre-seed, I'm guessing?
So I would do for the Web4 because it's very new, and as a VC that decided to actually define a new category for the market. There were no Web4 VC before we launched, right? So basically we decided to look into it and be like, okay, Web4 is a new thing. So obviously there is no mature, apart from like ChatGPT, is it mature or not? It's a different question. No mature project yet. So we're going to do pre-seed, seed, up to Series A for Web4. And Web3, we're looking into growth stage. So it's going to be post-Series A, Series B. And on the Web3, we have very often access to what we call secondary transaction, which is a company that raised money already, but because now there is a function of market. Right now, we are in what we call a bear market. A bear market is when it's a bit a struggle to fundraise, it's a struggle to get money in because of many different reasons, right? There is a global macro, economy that the world is not doing phenomenal in terms of economy perspective and so on. In any underlying, it can be in traditional finance, it can be in crypto, it can be in technology, right? So
so you do basically invest in the pre-seed and the seed and section A. Okay. And what trends are you currently seeing in the startup landscape that excites you the most? And globally, can you tell us a specific one to the Middle East?
Oh, wow. Okay. So basically anything in the Web4 space which are going to have a feature of artificial intelligence and quantum computing is something that really get me really excited, right? Because as I said earlier, this is something that definitely a lot of people will be attracted to, right? And the more people engage, the more sure you are of like, this is gonna work and be a successful company. And as we say in the space, in the VC space, you want to fall in love with the exit, not the project. which means that when you invest in a company, you want to make sure that this company, in a few years down the road, somebody bigger is going to be interested in acquiring them. And this is where you make the money, right? For the company, for everything. But then you also want to invest in a company that makes sense, right? That makes sense for advancing in terms of progress, of technological progress, or making change in people's life, right? So in the Middle East, there are a few different projects. It's not that of an easy question. I will tell you about the traction of the Middle East in this space. What is phenomenal, and this is an understatement, is the capacity Dubai and Abu Dhabi had over the last 2 years to attract human capital, to attract talents. This was, and I'm always very straightforward, but this was not necessarily a thing before, but now it has succeeded because of many different things. So number one, the way this country has managed the pandemic or the end of the pandemic. They kept the door open, you could travel easily and so on when the world was still keeping quarantine and so on. And I know what I'm talking about because I was living in Asia, in Hong Kong for 7 years, where we've been through massive quarantine and so on, right? So that was one thing. The second thing is the decision the country had to push positively for a lenient cryptocurrency and technology regulatory space here. And this has changed the whole picture because then it attracted people from Palo Alto, the Silicon Valley, people from Hong Kong, Singapore, heavily involved in the digital asset space, right? So what is interesting is that you would see some founders and some startup being based here, but you would also meet anyone really in the world, any builder coming to visit Dubai, because Dubai became a serious deep technology hub, right? So it's interesting. I would see products or projects sometimes that are native from here, or sometimes I just meet them here because I'm here and the world keeps on coming here and the world keeps on coming here and the world keep on wanting to meet. And I always say, be grateful, don't ask questions. I just get like 80 requests per week of inbound travelers coming to Dubai willing to meet. And this is extraordinary. This is real.
Perfect.
It's just like, it is so it's the way this country has managed to attract the whole world in terms of human capital, in terms of capital, and the top people from the industry, right? So if I have a specific project, there is this project I'm very keen now to have a look at. I will make it very, very simple in terms of explanation, but basically it's called Timeless. And Timeless is like your PA, your personal assistant in anything linked to your calendar, right? And this is very interesting in your private life and in your professional life.
So, as you're saying, a lot of successful people around the world, they come into Dubai and here they pour off their money and they invest in it, like people from Silicon Valley, that region, and many other places around the world. So, what do you think about that?
Yeah, so I have to say, I have been amazed. Like, seriously. I came to Dubai 2 years ago, right, from Hong Kong. And I didn't know what to think, about the region, right? And to be honest, especially in that crypto space where, when you come from traditional finance, where everything is, like so bootstrapped and so on, and crypto world is seen as a bit as the far west, right? It's just like the cowboy lands, right? So when I got here, at first I would meet with, so-claimed king of the blockchain of the desert, right? So it was like, it sounded very, very scammy. And I was like, what am I doing here, right? But eventually, I said earlier, I'm extremely amazed. And I'm very, I can be judgmental sometimes, right? But extremely amazed by how this country has managed to make like a shift overnight, like literally, and managed to attract all these people and relevant people that changed the whole perspective, right? Because when I came here and you would say crypto plus Dubai, there were a vibe of Miami cross Nigeria, if I may, like extremely scammy in a sense of like really deep scam. And then literally a few months after the change, like they attracted the biggest lady and gentleman from the industry in the crypto or digital asset space, in the tech space, in the investment banking space. It's just like, it's extraordinary. When you think about it, this country has been up and running for 50 years, right? So it's a young country. And they've been for a long time struggling to attract the talent, this human capital. But no, it's a real deal. No, it's there. And I think, yeah, the regulatory landscape has been helpful. Obviously, the tax environment has been helpful as well, especially in that global macro economy space right now that is not phenomenal, not great at all. So I have to say, kudos for that, because it's not a small thing. They really manage super well, and these people come sometimes to invest. They come sometimes to bring more on the table, to give a bit of their talent and share. Because at the end of the day, what I really love in that space, in the tech space, it's, as I said earlier, it's a community of giver. So it's people who like to share and give and build together, because at the end of the day, we can get to the next step by being a community, right? It's not just one brain that will make it work, right? You need like a lot of brain to make the magic happen, basically.
Right, okay. And how do you evaluate the potential of a founding team when considering an investment?
Yeah, so the first thing for me is also because
What's crucial? What do you look for?
Right. So because I'm people driven also, and the same way when I have investors investing in my fund, they look at the founder, right? So you invest in people, right? So the first thing is just to make sure that, the idea is solid, with people that are solid in the sense of like they're able to execute. So very often, the easy way is to invest in people that have been successful in the past. So you look at investors, at founders that might have already some success in the past. That's a strong signal, right? Another one is sometimes these companies we invest in, they already have a few sponsors or seeders or people who invested in them, and you like to look into companies that manage to attract smart investors. What we like to call smart investor would be someone that has already invested in this industry, that knows this industry, that can open some doors to you. You need for the company to grow, you need to do some partnership, right? And they know, so the investor not only put money into the company, but is what we like to call hands-on, will also help you to build, right, within your company. Can be helping you with the vision, with the strategy, can give you access to other partners or sponsors or other investors you didn't have access to, right? So this is a very good strong signal as well. And then I assess the why, right? I assess the
right. So it looks like a solid idea,
exactly.
and solid crew and all of that. Okay. Now the $1 billion question: what factors are crucial for a startup to scale successfully?
Okay. So now that's the $1 billion question. I would say so. Basically, once you're clear that you can attract a community, right, and you want to, so scalability comes at different angle. One of them can be becoming more international. So let's say you set up, your company in the UAE, and you want to show that you can grow outside of the UAE, right? So that's one thing. Is your product fit, like I said earlier? Is it something that can attract only this region, or can be also exported somewhere else, right? So this is a very strong signal for a successful scalability, right? Can you go and do more? And then depending on the product, is it a product that can grow? Is it a product that you can enhance, right? This is also a component of scalability as well.
Right, thank you. So now we know that the investment landscape has been changing a lot recently, and it's the pre-seed companies. They used to be only worth $50,000, right? But now they can bring it up to multi-million-dollar companies. So, what do you think about that? And do you think it's sustainable?
Yeah, thank you for asking that. I think a lot of people misjudge, right, what's going on. And basically, I mentioned bear markets, which is when the market is a bit down, there is less appetite to invest and so on. And then you have the bull market, when the market goes crazy and everybody wants to invest and thinks they're going to invest in the next big thing, right? So what is very interesting is, like, if you look at the founders, right, of a company or a startup, when it's a bull market, the founder, and if I may, will come to you, investor, very cocky, very, self-confident, and it will be like, that's the valuation of my company, right? If you want to invest, it's going to be that valuation, right? So the thing is like, and they become a bit like cocky in the sense that they will be like, you don't pick me, investor, I pick you. This kind of mentality, right? When it's a bear market, because it's really hard to fundraise then, they come with done to earth valuation. They'll ask for a little bit of money, not too much, just to prove their proof of concept. And it's way more healthy for the whole industry, right? So that's why, as a venture capitalist perspective, you want to invest on a bear market and you fundraise for your fund.
The bear market.
On a bull market, yeah.
So like you were saying, it really depends if it's a bear market or if it's a bull market. If it's working as a bull market, or is it a bear market, which isn't working as well. So you think that in the bear market you should invest less money because here it's really like a low percent chance to gamble. But in the bull, it's a high gamble. But usually people, they invest in which one? The bull.
No. So basically, as a VC, you want to invest in bear because it's when the founders of the startup will be coming to you with a more down-to-earth valuation, right? So they will ask for less money because they're struggling, they're homeless, let's face it, right? On the bull markets, because everybody gets crazy, everybody wants in, right? So they will have a lot of people coming to them and be like, okay, I want to invest in your company. And then they get like, okay, so I become a king. I can even choose who I want as an investor, right? I can become picky. But when it's a bear market, you don't have this luxury. Anyone wants to give you money, you take the money, right? It is what it is. So per an investor perspective, you want to invest in the bear market. So per fund, investment fund perspective, I want to invest in a bear market. I want to fundraise for my fund, meaning getting investor putting money into my fund so I can deploy that money into investment for them when it's a bull market.
Right, okay. So it's basically, so you usually want to do the bear market so that then you they have to choose you.
Yes, so right now is the best time. We're in a bear market. Right now is the best time to invest. It's the most exciting time because it's the most healthy for the whole ecosystem.
The role of a VC is not only about financing, but surely also about advising entrepreneurs. Can you give us an example of where you were investing in a business, but then they needed your guidance to be able to continue?
Yes. So this is when I like to call a smart investor or hands-on investor is not only you finance the project, but you also you're present within the company. So you can help them with their strategy, with their vision, how to scale and so on, right? So if I look into an emerging custodian, which is a digital asset safe, right? So I have my token, I have my coins, my digital coins. Where do I store them? I can store them in a digital safe, right? So if I believe that there is this emerging custodian company, a startup, I think that they're going to become a unicorn and they're going to be bought by a bank. And that bank is going to just like internalize them, right? So in-house them. So basically what I do is not only investing in them, I put the money to have them grow, but I advise them. So
then what's the point? You're giving money to someone. You don't want that money to go to waste. You want to actually try to keep.
I want to make sure exactly. I want to make sure I take them to Wonderland.
You don't want the heartbeat to
Exactly. I want to make sure they're successful, right? Because I need to be respectful of my money and my investors' money, right? Because I set up a fund as a VC. I put some skin on the game. I put some of my money and I invest for me and for my co-investors or my investors. So I'm respectful of my money and of my limited partner's money. So when I invest, I need to make sure the project I invest in is going to be successful. And to do so, I'm going to put my hands on. I'm going to go in the mud, right? I'm going to do what it takes to have them and take them to Wonderland. That's the idea. Take them to success, take them to the exit.
Do you have an example of that? Or
yeah, so this, for example, if I look at an emerging custodian, because luckily I've been working in the space. I was also in a corporate digital asset manager before, and we were selling custody, right? So I was mentioning the total addressable market, the product fit, the go-to-market strategy. I know all of this. I know the benchmark. I know who is the competition. I know the pricing. I know where the clients are. So I can definitely help the company just to take off, right?
Right, okay. So what advice would you give to a founder when pitching to funders?
I would say stay down to earth. Don't be too greedy. Don't ask for too much. Like really ask for the money you need to go to the next step, right?
Don't try to get some cheeky money.
Yes, I think it's you need to build trust, right? So you want to represent yourself as like, I am respectful again of the money you're gonna give me, right? I'm not just gonna play around and so on, right? So I think this is super important. And any founder is gonna be extremely biased, but extremely bullish in what he does. Like extremely, I have this idea, it's the next big thing, like it's gonna be, like nothing you've ever seen or heard before, or this or
So
that.
you should just be like modest.
Be more nimble, yeah.
And try to go with like the lowest amount of money, that's the minimum that you can get.
Yes.
But then if I asked you for like 500 million, what am I going to do with 500 million?
We'll take it.
Anyways, as we know, there are not a lot of women investors, and also when you're in Paris, they used to say, "Oh, what are you doing, banker?" Like you were saying, a banker was a really good job. So, what is your message for girls, maybe small girls, or maybe just girls like at your age, who want to get into being a VC and investments? And yeah, what's your message for these people here?
Yeah, just do it. I will. It's simple. When I studied in a dealing room, right, as a sales trader, and I told my mom, and she thought I was working in the, cashier in the commercial bank, right? She had no idea I would be in a trading floor, right? There was so little representation of women. A few months back, I was at the Paris Blockchain Week, which is one of the largest European blockchain conferences.
The blockchain.
Yes. And it's 10,000 people in the Louvre each year, right? And I was on stage with 4 huge market makers in the crypto space, big names in the industry. And we were doing this extraordinary panel. I get out of stage, and there were a lineup of more than 50 people asking to take a selfie with me. And I was like, you must have it wrong. These gentlemen, they're super famous. I'm nobody. I'm sitting on my phone. I'm not, And they were like, no, you don't get it. You can speak about trading, crypto trading, and you're a woman. And I was like, yeah, so what? And they're like, you don't get it, but you're a unicorn, right? You don't exist, and you're already big, and you're going to become someone bigger than that. So we want a selfie with you now when we have access to you, right?
Yeah.
And I was like, what is this, So eventually, when you look into the job market in general, if there is this job to be filled and you go to the interview, as a woman, very often, you would have 60% of the skills.
Because then you get like a tiny, like you kind of like special books. There are not a lot of women in VC in investment.
Yeah.
So then you get like a plus, and with this plus, with this like tiny buff, not tiny, but like with this buff, with this power of being like one of the few girls. I mean, I don't know that well because I'm not a girl myself, but. And as you know, guys, we had the chance to have some very talented women on this YouTube channel. Like, we interviewed Rio Ferreira at Berkeley in her lab. And today we have the chance to be able to interview Cinderella Amar. So yeah, we're really happy to be able to do this.
Amazing.
And we were very lucky to be able to have these extraordinary women on our YouTube, on this channel, because representation matters, and there are not a lot of women who actually want to do this, not a lot of women who actually want to do it, but just can't, like you were saying. So I really think it's extraordinary and very interesting, so we're really happy that we're able to interview some very talented women. So, yeah.
It's actually my honor.
Yes. So, thank you very much, Mr. Cinderella Amar, and welcome to family.
Amazing. Thank you.